right, guys, thank you guys all for coming in. This is the introduction to freelance finances, and I've been working as a I've been working as a freelancer for the past year, and there are a lot of things that I learned over the past year that I had to kind of claw my way to because there's not a one place shop where they'll just tell me all the things I need to know. So to hopefully help make your transition into side hustling, freelance, or self-employment easier, I'm going to be telling you a lot of things that I spent the past year learning. Okay, first of all, I am not a financial advisor, accountant, or anything of that sort, so please, please, please do your own research. This whole presentation is for informational purposes only, which means you can't sue me if you do something and something bad happens. Please consult a professional before you do anything that could have catastrophic problems. So I spent a little while putting this together, so I hope it'll be really helpful. And please subscribe to our mailing list. It's freelance.24villages.com. Today's recording and the handout that I just shared will be sent out after it finishes processing, and it'll be available for a limited time. Maybe I'm thinking about a week. And at that point, I think I will re-record and make like a nicer version of it to upload. What we'll talk about today. So first we'll talk about me. And then we'll talk about self-employment structures and how to choose one for yourself, when to create a business bank account and when to create a business credit card, business accounting so you don't go broke, taxes, how to file, what to file, all that messy things, retirement options and how to choose. I firmly believe that even if you are self-employed, you need to still be contributing to retirement. Health insurance options, which is a huge, huge issue in the United States. Pricing yourself and some self-employment principles that I hope you can kind of chew on, and setting your business up for success. And then in the end, there'll be Q&A session where you can just pop in questions. Okay, let's start with me. So my financial history is that I'm a first-generation immigrant. I came to the United States when I was 7 because of my parents' work. And though my parents have put me through college, obviously I've grown up and I'm alive. They did pretty well raising me, but they don't have the financial literacy catered to the United States. So I'm the first one probably in both sides of my family to invest in a stock market. In Japan, there's a pension for people who work for a certain number of years at a company. So you generally don't have to worry as much about creating your own retirement plan and your 401k, stuff like that, and Social Security. It's just kind of a very, very different world out there. So I didn't learn any of how to thrive with the United States financial situation growing up. So I kind of had to learn on the fly when I started working on my own. So I graduated at 25, so that was kind of late. Moved to New York, found a job after half a year at a whooping salary of $14 an hour, which, as you might imagine, it is a little difficult to navigate New York City on that. So this was 2014. So after that, the salary went $37,000 a year in 2015 to $50,000 a year in 2016. And then $60,000 a year in 2017, and then I finished off at $75,000 a year in 2019. And in between, I switched jobs twice, and I got promoted one time. And on my 30th birthday, I decided to quit corporate, and that was June last year. I saved my first $100,000 by the age of 29, and I began working as a full-time freelancer in July 2019 and had a lot of issues trying to figure out how to finance and make sure I don't get in trouble with the legal system to be a self-employed individual. So what do I do? And that's a question a lot of people ask, and it's a question that I have a lot of difficulty explaining. And obviously there's a lot of text on this page, but for the most part, I'm a technical instructor, content strategist, and a technical writer, and a technical coach. So my whole mission and the why is to help people get into tech and help get people into cloud computing, which is why I founded AWS Newbies, Cloud Newbies, and I blog about things, I turn out technical content, and I also work as freelance content strategist and technical writer, which I work with clients on. And how do I make money? So that's another question I think a lot of people have when we see people who are self-employed. So I I am currently around a 50-50 split between active income and passive income. And passive income is the money where you kind of set up a funnel and it automatically does its thing. You put out the content, you sell that ebook, you put it up, and then someone buys it, you make money. You could be sleeping, you could be eating, you don't have to worry about it anymore. So my active income is stuff that I described earlier, technical writing, consulting, coaching, and I also do users research participant at userresearch.com, and it's kind of fun because for once you get paid to state your opinion, and people don't like to hear your opinion usually, so it's nice. And my passive income sources are ebook sales, video course royalties, and affiliate interest from high interest savings accounts, Amazon affiliates links, Patreon and Coffee. They're both kind of a sponsor kind of situation. My podcast and educational products on Teachers Pay Teachers, and some of them make like maybe a couple dollars a month, others make thousands of dollars a month. It's really up to the income source, but all combined it's about 50-50. And obviously my retirement accounts and investments are also making money. And all told, for money, I work about 20 to 30 hours a month, which is a huge difference from when I was working corporate 40 hours a week plus 20 to 40 hours a week on top of that on my side hustles before I left. What didn't work for me when I was trying to figure this whole thing out? Keep expenses and income on Google Sheets. That didn't work because it was fine. Well, I didn't have that many things coming out, that many things going in. But after a few weeks or a few months, it kind of became unsustainable. Same thing with not having a separate business bank account and business credit card. That kind of hooks itself up. Not paying state quarterly taxes also doesn't work out for obvious reasons. I didn't know. Trying hustles that paid nothing but had real opportunity costs. It was wasted time, energy, mental resources. It's just kind of you're grinding and grinding and grinding, but in the end, you're getting like 20 cents out of it, which doesn't really help you when you need to kind of live on this income. Related to that is having my pause and way too many jars. I still have this problem. You have so many interests and you want to do so many things, and I also have executive function disorder, so I get distracted very easily. And I'm like, oh, shiny. And I try it out, and it just does not work out. I feel personally attacked about spreading my efforts. Yeah, all those paws in different jars. It doesn't work out. You think it will, but it's just drains on everything. And not knowing my worth and not realizing I can charge double, triple, and even quadruple what I was charging, which as a person with a lot of imposter syndrome, it's kind of like, well, can I charge this much? Like, why would anyone pay me this much? But people will pay you if your quality is up to standard. So what did work? So accounting through QuickBooks after setting up my bank account and business credit card worked out really well for me. Setting actionable, realistic income goals worked for me. Raising my rates worked really well. It kind of validates that my skill sets and what I'm putting out is worthwhile and that I made the correct decision and pursuing this instead of my corporate job. And so I had this Google Sheets and charts and tables for everything. It makes it so easy to immediately see what different sources of income you have, see what's making how much money, and potentially see what you might need to focus more on or what you need to cut out because it's actually not doing very well for you. And you can kind of see like where I'm making money, and you see most of my income sources are passive income. And there's also to the right is the graph that shows kind of the ups and downs. Ideally, they kind of stay the same or just keep on rising, but the world's not perfect. So self-employment structure. So this is a question I think a lot of people have. And when I asked on Twitter and Discord what questions people had, what business structure should I just do? I mean, LLC, a corporation, a sole proprietor, what does any of this even mean? So I think that's a very valid question and something a lot of people get tripped up on. There are a couple different ways to exist as a business entity. So you could be a sole proprietorship, which most of us start out as. You take on all the profits, losses, responsibilities as a person. And you don't have to do anything for this. Once you start making money on the side, even mowing the lawn, raking leaves, you are a sole proprietor. And taxes are done through you as the person. Partnerships are two or more individuals form a business and share profits, losses, responsibilities in running a business. So here again, you're personally responsible. You and your partner, whoever it is personally responsible for all the profits and losses. And limited liability company, or LLC, this is like the really popular one. I have an LLC myself. It combines the pass-through taxation of partnerships and sole proprietorship, which means that you get the profit, but with the limited liability of a corporation. So what is a corporation? Corporation is a state chartered business owned by stockholders, which is just a fancy word for like owners. But these stockholders are not personally liable for debts. So you get the profits, but you don't have to take on the debt because this corporation exists as a separate entity from you, the person. So LLC allows the taxation, pass through, you get the profits, it's very flexible. But if some bad shit happens, excuse my language, and you get into a lot of debt, you as the person are not liable. Like your house, your car, your property doesn't get taken away from you. And S corporations is usually a small startup with limited number of stockholders where businesses gain and losses are passed on to the stockholders. So that's a different kind of corporation. It's just kind of like the semantic. I recommend sole proprietorship if you're just starting out and testing the water, and LLC if you want to make this a legit thing, and here's why. So LLC and corporation comparison. A very comprehensive comparison between the two is linked in the handout. You can kind of see in this chart. So the liabilities, taxation, and the maintenance. So LLCs are cheaper, it's flexible, and you don't need to have like a board of directors. So LLC or corporation, LLC is less work, less money, less formalities. But if one of the members, like if there are more than one of you, or members, they mean owners, leaves the company or dies, the LLC will dissolve by default unless you put into your paperwork when you're creating the LLC that won't happen and you can replace the owners. And it's very flexible on who can own it, how you manage it, how much money you give out to people. And you as a single individual can form an LLC basically overnight. Corporation requires shareholders, board of directors, corporate officers. There's just a lot more going on. It's kind of like what you would expect from a company when you think of a company. Owner can leave or die and a company will still exist because a corporation is a separate entity from you as the human. If you want outside investment, corporation is the better option. If you can sell stocks, share percent of business shareholders, stuff like that. But taxes are a lot easier with LLCs because income passes through to members or owners. And so you pay self-employment tax and sometimes franchise tax, which depends on the state, which is basically the state saying, you have our permission to sell shit here, and for that privilege, you pay us money. Corporations are taxed as separate legal entities, so you pay tax on profits, corporate tax. So dividends distributed to shareholders are also taxed. So it's like double taxing. Basically, there's a lot of semantics that goes on with both. And if you are really not sure which one after reading that really comprehensive website that I linked in the handout, you should definitely consult an accountant. So I have an LLC. I did not consult an accountant because I didn't know how to find one that I can afford. I mean, that sounds like a joke, but I think it's one of those things where a lot of us get stuck because one, we're not making that much money. Two, it's like, where do I find one that knows my state, knows my situation, and that I want like an online only business, but it's just me, I don't make that much money, but I want to expand, there's all these things. And then I just had this mental block where I wasn't sure what to do and I couldn't move on. So I was like, you know what, I'm just going to have to make it and I'm going to have to do it. Yeah, so I did look at Stripe Atlas. Back when I looked at it, they didn't do LLCs, but they might now. I think that's one thing I was looking for, but I didn't actually find to put into the handout. So that's a good add. But there are a couple other companies that help you create LLCs and corporations that I've linked in the handout. So here's my reasons on why I made an LLC. It's just me, right? I don't have a corporation with a board of directors, stuff like that. I wanted something very simple because I didn't really know what I was doing at all. I didn't want that kind of toughness, the flexibility that you're afforded as an LLC was much more enticing to me, and also was much cheaper to do it. So I did it in the state of Maryland. A lot of people do theirs in Delaware for tax purposes. I kind of thought about it for a little bit and I was like, nah, I'll just do it in Maryland. And I personally use this service called Northwest Registered Agent to register my LLC for me. I was considering doing it on my own, which is totally possible, but there's no checks and balances to make sure you filed everything correctly, that you are legally set to go. So I decided, this first couple $100s to get my LLC set up properly, that's worth the investment for me. So, but you can totally do it on your own. And another reason why I hired a company to do it for me is because in my state, registered agents, who are basically entities working on behalf of your organization to register and file legal paperwork, which would be me because I'm the only one here, and because I don't have a physical office or a store to put on there, that person's address, physical address, is public. So you can see that in this image here that I have. On the right side, you can see the registered agent's address. And that would be me if I didn't hire a registered agent. And registered agent is separate from someone who create your LLC for you, but Northwest Registered Agent did both for me for a fee, and it wasn't that expensive. Yeah, basically you need an original name for your state. You can Google your state's website where they have a list of all the names of companies that are registered in that state. And yeah, your business is listed publicly online. So whatever you don't want public for the world to Google and see, hire someone. Hire someone to do it for you. So Google form your business structure like LLC, and your state like Maryland, form LLC Maryland, and you'll get all this information on how to file your LLC, corporation, sole proprietorship, which you don't really have to do. So that's a good way to get a lot of information. So next one is another big thing, I think, is the self-employment accounting. So a lot of people have difficulty balancing, like, how much should I spend on my business? How much should I take as a salary? You know, there's all these things, and taxes, it's very scary. At least it was very scary to me. You get a lot of new expenses when you quit corporate. I'm sure not every one of you is looking to quit corporate. Maybe you just want a side hustle. But if you do quit corporate, it comes with a lot of new expenses, you know, software that you took for granted on your work computer, which I didn't think would be a big issue, but it's actually kind of expensive. Even like Adobe Acrobat, you know, that's you have to subscribe for that. You know, printing costs, pre-tax Metro card, health insurance is a big one. You might need to get better Wi-Fi for your home. You know, you might need to rent co-working space if you don't have space in your home to work, and this was pre-COVID. You know, you need retirement accounts. You don't get the retirement account match that you used to get from your company. Tax returns were very simple back then, and you don't have to pay quarterly taxes. But very flexible work schedule, location freedom, working style is very flexible, and there's technically unlimited income potential, which isn't something you can say for your corporate job. There's just all these new accounting chores that come into play when you start side hustling, freelancing, or quitting your corporate job to do this full time. So this was one of those things that I recommend to people who are like, oh, I want to start freelancing or becoming self-employed. How do I set up my monies? And so this is Profit First, which is this book. It's by Mike Michalowicz, and it's one of those like staples of personal finance books when you are trying to work for yourself. So he says you need at least 5 checking accounts. Income, where all sources of income lands first. And then from there, you kind of move them around. So there's the profit, which is your bonus, owner's compensation, your salary, taxes, what the government gets paid. This is not negotiable. Operational expenses, which are costs of running your business day to day, like your subscriptions and your office if you rent an office. And he says that you should think of it as sales minus profit equals expenses. Usually we think of things as sales minus expenses equals the profit. But he's like, no, you got to change the way you think, because there's usually never anything left over. So personally, because this was kind of created for, I think, actual companies, and we are kind of trying to just get started with like a 1-person or 2-person entity, I think this is too much for us. So what I recommend is a 3 or 4 account. Income, this is like what you get paid, and you need to get paid, as they say. It could be that you just put that money to retirement. You're doing all this work, you need something, which is scary. It was scary for me to take money out of my company or my work, but this company and work should be working for you, not the other way around. These percentages, except the taxes, is fungible. Like you can kind of adjust it to how you want it to be, but this is kind of the ideal that I think of. So income 50%, you can hopefully save and live on this amount, which I know for a lot of us, including myself, that's like a goal at some point. Taxes are 35%. This is not negotiable. Your tax rate might be lower, but personally, I just think it's better to be safe than sorry. And if there is a surplus in this account after tax time in April, then that's great. That's a bonus. You can do whatever you want with it. Operational expenses, you want to keep it as low as possible. This really depends on how much you spend and the type of company you're running. Because for me, it's very low because I just need some SaaS products like Gmail, stuff like that. It's QuickBooks. But if you're running like a physical store or something, or you're selling something and you need material, then obviously the operational expenses will be higher. And savings. So this is not savings for you, but savings for the company. You could put that in the operational expenses too, but it's just kind of making sure that you have that money for the annual expenses, the larger purchases. So I would recommend that you have this separately in a high interest savings account, and the taxes in a separate account in a high interest savings account. And income, I would bring that into your personal account. So the operational expenses, that's my main account. The operational expenses is just my main checking account where all of my deposits are put into. So it's kind of like what's left. Ideally, I should probably have a separate account for that too, but ideally. So business and personal account, it actually doesn't really matter. You can just open a bank account in the company you already use. Like if you're use Capital One, you can just have a bunch of accounts in Capital One. I have noticed that Capital One, you can't label your accounts. Maybe they're going to fix it. So it's not really ideal for this situation because you want to ideally be able to give nicknames to every account that you have. If you do really want to do it the proper way, yes, you should have it in a business account. But this is kind of like another one of those things where what matters is that it's separated, not so much where it is. If you are really wanting to do it properly, or I think if you're like a corporation, you definitely need a business account. And also you want to save for retirement. So this has to be adjusted depending on how much you're willing to put into retirement. And whatever you can, if you're not touching like the taxes and savings, put it in a high interest savings account. Those are not providing as much interest these days. So this is something that I got really messed up on because no one told me. So if you're going to create a company like an LLC like me, then you should do that before you open your bank account or business credit cards. The reason is that when you create a business credit card or a business bank account, you can actually do it as you. You don't have to have an LLC or a business, but that means that they look at you as a sole proprietor. I opened my business bank account at Chase. The business bank account is with my LLC, but my business credit card is under me as a person because I opened a business credit card to pay for my LLC creation. But at the time, I didn't realize that if I don't have the EIN that I get after I register my business as an LLC, and EIN is the tax number. It's like social security number for businesses. If you don't have that to open the business bank account and business credit card, they just assume it's a sole proprietorship. The order that you want to do it is register your business or LLC first, get EIN from the IRS. You can refer to the handout on how you can do that. It's free. If someone tries to charge you to register an EIN, it's a fraud. Don't pay. It's free. You just go to the IRS website and they'll send it to you. You create the business bank account with your business name and your fancy new EIN, and then create a business credit card with that EIN as well. Then you start building business credit as opposed to that credit being a reflection on you, the person, and a sole proprietorship of you, the person. So I've been too lazy to change my credit card over to my business because I don't really care that much about my business credit because I'm never gonna need to start a lease on a office, right? If you have a reason like stuff like that, or you need a way for other companies to extend your credit, then yes, you should definitely make sure. Well, I mean, you should definitely do it in the first place. No one ever told me when I was opening these accounts that this is what I needed to do and what order I need to do it, so I didn't, but you should definitely do it in this order that I just expressed, because some banker is going to look at you and go, why did you do it like this? And it's like, no one told me. I didn't know. Another big thing is accounting. So as soon as you can, I highly recommend you set up QuickBooks and set it up with your business bank account and your business credit card or debit card. If you do use a debit card though, I would highly recommend that you make sure that debit card has like purchase protection. Credit cards, most of them come with that as default, but a lot of debit cards don't, and it's a lot harder to fight transactions and fraud for whatever you buy if you don't have that protection. And try to keep all of your business balance transactions between these accounts. It just makes accounting so much easier. And QuickBooks, just you can kind of see how easy they make it look, but you can see the profit and loss immediately. What was your income this year? What was your expenses this year? And what did you spend your money on this year? And it's just kind of like a jolting check for you every time you log into QuickBooks and you see it, visually seeing these things, and it just like makes it click for you. And there are some nice bonus features in QuickBooks, though I have been told that they haven't shown up on everyone's. So there's the timekeeping. Timekeeping is pretty important if you're working as a consultant. And one feature that I really like is their invoicing. The reason why is a lot of services for invoicing, there are like standalone services, but a lot of them charge you for it. With QuickBooks, it's free. And one thing that I want to point out is on the screenshot that I have, in the payment method in the bottom, there's bank transfer and credit card. So uncheck the credit card unless you want to take credit card, because as you can see there, they will take a fee. But if you do ACH transfer, there will be no fees. Agnes said, taking your example from before, if you get your business set up and get a business credit card, you can deduct the cost of buying a computer for your business when you file your taxes, right? Do you do all that with QuickBooks too? You don't have to do that through your business credit card. To deduct, I have purchased with my personal credit card before I got my business credit card, and I have deducted it. But yes, you can put that into your QuickBooks. There's like places where you can say kind of like what you've purchased, and you can buy them tax exempt. It's pretty useful now, especially like I just bought this webcam, and that will be tax exempt. So that has gone through my business credit card, through my business checking account, and it comes into my QuickBooks, and then I just say, hey, this is a new piece of equipment that I'm using for work. Yeah, so there's a lot of things. I would Google that, and also this is another reason why having an accountant would be great, because they will be able to tell you about all the different things you can deduct on, and there's a lot. And okay, so the next one is self-employment taxes, and that's another like really scary thing. Like I personally had no idea what I was doing. As I was saying before with Agnes's question, business expenses are tax exempt for the most part. So like courses you take to learn more, books you buy for your business knowledge, equipment you buy, like your computer, SaaS products that you subscribe to, like QuickBooks, G Suite, Canva, Adobe Creative Suite, potentially parts of business trips or conference tickets, and half of the meal if you're eating with a client, not your half, their half, stuff like that. So accountants are really useful for stuff like that, because I don't have an accountant and I kind of have to Google it and hope that my answer is correct. But if you have an accountant, they will know, which is, I guess, my next point. If you can't afford a human accountant yet, get the QuickBooks and TurboTax bundle for self-employed people. It will save you a lot of money and a lot of agony. QuickBooks and TurboTax is by the same company now. They're owned by Intuit. They're both owned by Intuit. And so is Mint. Mint is also owned by Intuit. So the QuickBooks to TurboTax integration is great. And in the handout, there are discount codes if you want to try it out. There is like bench accounting, which is like real accountants that help you do stuff. And I believe it was something like $100 a month or something like that. When I was researching it, it sounded really cool. They give you like real humans to do your company's accounting for and taxes. But I was like, well, I don't make enough to pay them. But in the future, that would be like a great thing for me to want to look at. Yeah, and QuickBooks are also great. There's now a feature where you can add your accountant to it. So they can just take that information that you're putting in, and your bank accounts are automatically putting in and file taxes for you. So it's not that you don't need that unless you have a bookkeeper, which that means you have to hire another bookkeeper. QuickBooks are definitely much cheaper than hiring a bookkeeper. But tax accounting can just come into your account and do your taxes through with the information in QuickBooks. So what they recommend is you have QuickBooks self-employed and then a tax accountant, both, and kind of do it that way. Okay, so back to taxes. You need to pay federal, state, you might even have county, city tax if you're in places like New York or San Francisco. And then there's a self-employment tax, which is 15.3%. And if you're employed by a corporation or your company, your employer pays half of it. But once you become self-employed, you have to pay both the employer and the employee side. And you also need to pay quarterly estimated taxes to federal and state and file annual taxes in April. QuickBooks Self-Employed will help you with quarterly and annual taxes. They estimate quarterly taxes and will help you pay for it, but it is only for federal tax, not state, as I learned this year when I was doing my taxes in April. Yeah, I owed a lot of taxes. They also help you annual tax time by exporting all of your income expense information into TurboTax if you have a TurboTax subscription. And things to note is that, again, it's just federal taxes. They don't help you with your state taxes for the quarterly taxes. For the annual tax, they will help you file for state and federal both. Currently, they can't take into account any money you're putting into retirement pre-taxed as tax-exempt income. So I've kind of mostly had to ignore my QuickBooks until tax time in April because I just kind of have to keep track of how much I'm putting into retirement. And during tax time, you have to unfortunately Google to find a way to input your pre-tax retirement contributions into TurboTax so that you don't get taxed on them, because there's not like a very easy way to go. Like, we really had to hunt for the feature. It's like hidden in the help section. If they did that automatically, like I could tell them what I put into my retirement, that would be perfect. But they currently don't do that. And that comes to retirement accounts. So I firmly believe even if you are self-employed, you need a retirement account, especially if this is a side hustle. This might be a great way to boost your retirement. So retirement, as a self-employed person, you have few options for retirement accounts: Roth IRA, SEP IRA, and individual/solo 401k. So I think everyone should get a Roth IRA as long as you make below the income limit. But the income limit is pretty high, so chances are most of us can make a Roth IRA. You should choose whether you want a SEP IRA or a solo 401k, and also make that one ASAP, because you can fund this account up to tax day next year with this year's income. You can have both a Roth IRA and either a SEP IRA or a solo 401k, but you cannot have both SEP IRA and solo 401k. And if you have a 401k from your day job, you gotta make sure that you keep track of how much you're contributing, because the annual max is for both. You can't put $19,500 in both. It has to be $19,500 total. And Roth IRA is just separate. Okay, so maximum contributions for 2020. Roth IRA, which is post-tax monies, is $6,000. So you are taxed now, so you are not taxed when you take it out. And SEP IRA, you can put in 25% of your salary with maximum overall $57,000. Solo 401k, you can put in $19,500 as an employee and 25% of your net employment income as the employer, which in this case, they're both you. So you are putting in $19,500 and 25% of net self-employment income, up to $57,000 in 2020. And these limits may change with age. If you are older and you can do catch-up contributions because you haven't been contributing when you were younger, this goes up. And if you have an employer-sponsored plan at your day job, you can only put in total of $19,500 a year as employee in both 401ks. So should I make a SEP IRA or a solo 401k? And that is like the $1 million question. I was really confused for a very long time. I personally have a solo 401k, but the same reason as why I have an LLC is because it seemed more flexible. You should definitely consult an accountant for this. And I'm going to say that again. You should definitely talk to an accountant. I didn't, but that doesn't mean you shouldn't. You definitely should. There are a lot of differences between two that I won't go into. I've also put in links to the comparison and what both of them are, what both of them aren't, stuff like that in the handout. A sample scenario is you made $50,000 pre-tax this year, and for some reason you don't need any of this money for living expenses. The dream, right? With a SEP IRA, you can contribute 25% of it, so $12,500. So your taxable income will be $37,500, and your total contribution for 2020 is going to be $12,500. With a solo 401k, you can contribute up to $19,500 as the employee, even if you only made that much. So you can contribute up to 100% of your income into your solo employee as long as it's below $19,500 as an employee. Now, you have to pay half of self-employment tax and stuff like that. So it's not like actually 100%, but it's very close. And on top of that, you can contribute 25% of your income as employer, which is also you. So you get taxed on the remainder, which is $18,000, which as you can see is much less than the $37,500. And the total contribution is $32,000 for the solo 401k if you manage to max that out. So as you can see, with a $50,000 income, with a SEP IRA, you can only put in $12,500 max. But with a solo 401k, you could put $32,000. Yeah, next webinar, how to find a good accountant. Yeah, well, someone needs to do that one because I clearly haven't found one. So up to the limit of $57,000 a year in 2020, you can contribute more with a solo 401k because you can put that extra 19,500 as part as an employee. And as I said earlier, you still have to pay, I think, half of the self-employment taxes. So these numbers are not 100% accurate, but you kind of get the gist of the difference of how much you can maximally contribute. Moving on to health insurance, because this is a huge problem in the United States. What are your options for health insurance? You can go on the healthcare exchange. So with this, it's your best bet is to quit your job at the end of the year so that you begin your next year, because the amount that you pay is based on your predicted income for the year. So if you had already made a bunch of money in the first half of the year, something before you quit your job, you have to put that into account. So you don't get as good a rate as if your predicted income is just your freelance income. Unless you're going to make bajillion dollars freelance, then you don't have this problem. You could also consider things like Oscar or Health Sherpa, and they also help people who are self-employed get health insurance. It will be expensive though. Another option that I considered personally was there are a lot of companies, well, not a lot, there are a bunch of companies offering insurance for part-time work. So Google companies offering health insurance for part-time to find a list. There's a lot of lists that people have created that offer insurance for part-time work. And some examples are like Starbucks, UPS, Trader Joe's, Whole Foods, FedEx, Costco. I've heard bad things about Whole Foods, but so there are like pretty big companies that offer health insurance for part-time. Yeah, those are some options you have, but health insurance, I think you should definitely look into before you make that leap, because especially with the current climate, you don't want to be without health insurance. Yeah, so with Christian healthcare ministries, I think those are not health insurance. They can pick and choose what they choose to cover, which is kind of dangerous. So you should really need to research and read into what they will cover, because when that came out first, when Obamacare happened, people were paying into that and then realized like they don't pay for their treatment that they needed. So while that is an option, you really need to do a lot of research with that before you sign up. Pricing your services. So this was a question that I had when I asked for questions. And I think this is one of those things that a lot of us struggle with. So one of the things that I really want to emphasize is do not join the race to the bottom. Fiverr and Upwork and a lot of the freelancer sites are very notorious for this. If an hourly rate is too low, I highly recommend you don't accept it, because it will kind of eat up your time and energy for when the better opportunities come around, you can't take it. And when companies negotiate too hard to lower your rate, you might need to reevaluate where they value your work and time, and whether they're going to just end up becoming that toxic client that you're going to dread working for. And when you are stuck doing labor that takes a lot of time and energy for a very low rate, you do risk missing out on opportunities that arise because you don't have the time or energy to be looking around or saying yes to that opportunity. Passive income is a great way to circumvent the need to accept low wages, because you have the freedom to say no to opportunities that won't serve you. Sorry if you heard that. It's my husband out of control. Anyways, so what I highly recommend, which I know it's really hard psychologically, I struggle with it a lot too, is value-based pricing. So there are two ways to bill: by project or by contract. So you have a deliverable and you deliver it, or by the hour. So there is no right or wrong way, though people do like to have very polarized opinion on this. But make sure you are valuing your time and skills, and be very wary of diluting your perceived value. So perceived value is people look at you and say, like this book, right? If someone was selling this for 99 cents, you're probably thinking, is it a good book, or is it going to be one of those like junk ebook? But if they said they're like $15, you're like, okay, this must be like a legit book. And there's no like concrete evidence of the way that you make this decision, right? But just from the price point, you perceive that the value for a $15 book is more than a 99-cent book. People tend to associate cheaper labor with lower quality work and product, which is definitely not what you want to do. You want to elevate yourself to be a high quality commodity. one thing that I recommend is you look around for services offerings from your competitors to gauge the going rate and what kind of services they're offering. There's a lot of people who post their rates, which is amazing, for their services like, oh, resume editing. They'll have a package for like $295. I do this, 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 and this. And for this, I do for $500, and you can be like, oh, so this is how much people are charging for these kinds of services. And you think the rate is crazy high? Give it a try, because you never know. They can always try to negotiate down, but you've started with such a high anchor rate that even if they negotiate down, it's going to be so much higher than the low rate that you are going to start out with. One hope is that we are going to normalize sharing rates to make sure everyone is being elevated, because the only thing that hiding how much you make does in corporate setting is to allow for income disparities to exist. And it's kind of the same with the freelancing world too. So I implore you to try out the value-based pricing. How much value are you bringing to the customer with your product or service? This could be like, oh, you're teaching them a really important skill that will give them a $30,000 raise, or you're going to help them become certified in this certification, and that is going to help them get this really nice job that doubles their income. People will pay more for the perceived value that they're going to get from your service. So if you're providing more value, you should charge more. And also remember your taxes. Remember you are being paid pre-tax. And so you have to be okay with the post-tax take home. Say if your effective tax rate is 35%, a $50 an hour gig is actually only $32.50. And your $25 an hour is only $16.25. So if your rent is $1,000 a month, you need to work for 95 hours if you made $25 an hour. So you have to be okay with your post-tax. I know like pre-tax, the numbers look really nice, but then you look at it and then you look at how much taxes you need to pay, and then it's just sad. And setting your business up for success. Few principles that I like. There's a book that I don't think I have a physical one here, but there's a book, Give and Take, which I recommend you read, because I think a lot of us are kind of givers, and that's why we are producing content. It kind of tells you like which is better way to have a better business and living a more fulfilled life, being a giver or a taker. There's like a nuance to it. So you can't just be a giver who gives all the time. Then you have nothing left. And you can't just be a taker who takes all the time, even though it might work for a little while. You need to be like a smart giver. So he kind of talks about that in his book. And all these books are listed in the handout. And another one's like the 80-20 principle, the concept that 80% of anything is achieved by 20% of the resources. That could be time, by people. Somehow when you only have 20 minutes left on your battery and you're in a cafe, you can't charge your laptop, suddenly you get everything done. The goal is to learn to prioritize and elevate that 20% and hopefully start chipping away at the rest that's not serving you. And another principle that I like is pay yourself first. Pay your taxes, your savings, your salary, and then pay expenses. That makes you focus on cutting out all these things that were nice to have, but you can't really afford, or stuff that actually wasn't necessary. And savings should come first, not last, because there's usually no money left at the end, no matter what we think. Initial startup year. So I think you definitely need a domain and a website for your business. If nothing else, a quick landing page at card.co. I love card.co. I create a lot of landing pages on it, but it just kind of tells the world, hey, I exist and this is my contact information. This is what I do. And you can create that in less than an hour if you use card.co. So I highly recommend that. This is also in the handouts, a lot of links and service providers you can check out. G Suite. You get that branded email address, comes with great resources like calendars, storage, Google Sheets, this presentation. It's just a really good service for like $6 a month. But if you don't want to pay, you can try Zoho. I haven't personally tried it, but a lot of people have recommended it to me, and I know a lot of my friends have clients who use Zoho. So they're like G Suite, except it's free. QuickBooks, I know I've been harping on QuickBooks a lot, but for the love of God, please keep track of your expenses from the start or today. It's not too late. It'll make your life so much easier. And the free invoicing service is great for your services. And you need a business bank account. You want to separate your personal and business expenses and income as quickly as possible so that during tax time, you can get all the tax exemptions that you should be getting. And also you're not trying to figure out what went where and where you bought what. And for now, this can be at your personal bank as a secondary checking account. All right, so some nice to have. If you don't have one yet, a Roth IRA account is very nice to have right now. And if you can feel like you're gonna crush that retirement thing, then get yourself a SEP IRA, I-401k, solo 401k. Another nice to have is a PO box. If you send out newsletter campaigns like with MailChimp, you need to have an actual physical address. So I use my registered agents, but PO box is just kind of nice to have for those kind of requirements where you need to put a physical address in, especially if you're shipping things out physically. If you have like a physical shop, it's just nice to have a physical address where you can actually get mail to put into these things that are public. Very nice to have is a human accountant, because QuickBooks is nice, but as we've been saying for the past hour, a real human accountant can really help you out. And they can probably even help you file your LLC or your corporation for you, or tell you which one you should create. All right, so here's tips. So we're almost at the end, and then we'll get to Q&A. Keep startup costs low. I know there are a lot of really cool stuff out there, but really you probably don't need them. And before you know it, you're somehow paying for hundreds of dollars a month in SaaS products, and you're like, what am I even paying for? And that can really cut into your revenue. Review your income sources. Like once a quarter, evaluate if you're charging enough, if you need to branch out in certain new interests that you found, if you need to fire a client, invoke your 80-20 rule machete. You should do that periodically. Focus on creating passive income when you have a moment. Making money while you sleep is great. And even if it's only like $20 a month, that's still $20 a month you otherwise wouldn't have gotten, but you didn't really have to do much for it to keep sustaining it. So you should really consider it. Pay your taxes, because paying interest and penalties on taxes owed is the last thing you want to do when you aren't making that much, because you're trying to struggle bunny your way through setting up your business. Don't quit your full-time job if you need a loan soon. So like house, car, a credit card, a personal loan. Get it done before you hop to freelance, because they don't like giving loans to people who are freelance. I think you need 2 years of sustained level of income proof before they'll offer you a loan. Keep track of services you are signed up for. And if you purchase something for a year, then mark the renewal date in your calendar so you can reevaluate before the renewal. Don't compare your chapter 1 to people's grand finale. When you hear about people and successful startups and websites, people usually talk about it because they were successful, right? Most people don't talk about their failures or the 5 other failed ventures. And it just kind of seems like they just came out of nowhere and became a overnight success. But chances are, no, that's not what happened. It probably took them 10 years, and you are comparing your chapter 1 to their grand finale. And finally, remember why you decided to freelance. Your business should be serving you, not the other way around. You need to figure out a way that you can enjoy life, improve your quality of living, and just kind of enjoy the process. It shouldn't be a grind. It shouldn't be 24/7 sleep is for the weak rhetoric like some people try to tell us it is. You should really be having your business work for you. So if it's not bringing you joy and it's not fulfilling you, and it's also maybe making you poorer than you were before, you kind of really need to reevaluate what's going on. And as I said earlier, please subscribe to our mailing list. I'm going to be mailing the handout out to you, and I will be sending this video out once it's done processing, and it'll be probably up for a week. And again, do your own research, have fun, and let's get rich together. All right. Q&As. So I've been answering a bit of questions throughout the stream, but if you have any Q&As that you want answered, let's try to answer them now. How do I make my contracts? So it's a very good question because I kind of Google it. So I haven't made really hardcore contracts. There are companies when I work with them that make me sign their NDA and they have a contract. But mine personally is kind of the scope of the work that we noodle out, reiterate it in an email, and then they digitally sign off on it. You can make a more official one that it's not just an email where they sign off on it, going yeah, this sounds good. You can make that with Adobe Sign. There might be a free service for it, but in my case, it's those emails where they sign off on my rate and the scope of the project, and then I send them an invoice, and the invoice gets paid, basically. I know contract was one of those things that I was kind of stuck on in the beginning, and then I guess I kind of just forgot about it. I do ask companies if they want me to sign an NDA or if they want to do a contract, but most of them have just been no, here's the money, which is, I guess, not what you should do. You should definitely make contracts, especially if it's with a big company. What finally made you decide to go freelance full-time? Yeah, so the thing that made me go freelance full time is when I had a moment of realization that I'm not doing something that I enjoy. I didn't really believe I was bringing value to anything with the work I was doing in my corporate job. And I wasn't sleeping, I was nauseous, like I was really stressed out. And it was just kind of a really toxic situation at my company. But I also had built up my freelance and side hustles and side interests that were taking up more and more of my brain space and my time. And I just felt like I couldn't put as much of my energy and time into it when I'm working a 40-hour job. It was probably brewing for a while. I was intending on quitting anyways half a year after when I quit. I just wasn't intending on doing it that quickly. As I was building up my passive income and my side hustle income, I was like, oh, maybe this is something that I actually can do. And I also saved up a certain amount of money. I think I saved up $150,000. And I think your first $100,000 is like really vital. It just kind of gives you that freedom, like emotionally, to kind of pursue things. And I figured out with that amount of money saved up, even if this completely failed, I can live for a while. Even if I made zero money, I can live for a couple years. So having that cushion, and if I needed to look for a job again because my freelance failed, that I have a cushion and a buffer before I like critically need to have a job, that really allowed me the kind of mental space to make that leap. What do you do when your client misunderstands the agreed scope or changes their mind about what they want and doesn't want to pay for your work? So I had this issue about half a year ago when I was doing technical writing for a client, and the person who was giving me the project didn't understand the technical aspect of what she was asking for. So she thought she was asking for something that was communicated to me. So I gave her what she was asking for, but that wasn't what her startup CEO wanted. So then they didn't want to pay for it because it's not what they wanted, but that was what they asked for. In the end, I was like, well, that's not okay. We communicated, we settled on this. That was a company that even had like contract and stuff. So I was like, this was the scope, whatever. And in the end, they agreed to pay for half, and they said I can post this article wherever I want. And I'm like, I don't want this article. I wrote it because you wanted it. So it wasn't like the best case scenario, but at the same time, it was our first project together, and it was like a couple $100, and I got paid for half of it. And so to me, it was like, okay, it's kind of like a small enough loss that it was a good opportunity for me to, one, learn that these kinds of things do happen, two, to kind of figure out how to deal with stuff like that. And three, thankfully, it was a very small project and I only lost on like $200. And I can be like, okay, well, this happened and next time I will do this instead. So it was just kind of like a learning experience for me. But after that happened, I was actually kind of shocked that more of these things and more of people trying to not pay you hasn't happened to me yet. I think that kind of also solidified that you kind of need a network of people who respect your work and respect your time to work with instead of just anyone who will hire you, because it quickly gets to that race to the bottom where people try to get as much as they can out of you without compensating you properly. Have you heard anything from the freelancing community about the pros or cons of filing your taxes married, filing separately? Yeah, so it impacts contributions limit on Roth IRAs. You can basically not contribute to Roth IRA if you are married and filing separately. I don't have enough freelance friends with this issue, but personally speaking, we decided to file together because it makes a lot of the income tax brackets higher. When I was working corporate and I was making like $75K plus my side hustles, the difference in our income would not have been enough that it may have been more beneficial to me to file separately. Basically, there was like really no benefit to filing together. But now that we have such a disparity in our income and I can put a lot of stuff as deductions like jointly, it's been working out better for us that we file joint. It's just been less paperwork. I hate filing taxes. I can't speak very much to it. It's just kind of, I guess we went with the easier route, which was to file together. And we were able to do it through my TurboTax self-employed. We were able to file for both of ours. So we filed for my corporate, the half year that I was working corporate last year, my freelance income, and my husband's corporate income. We were able to put in all our retirements and stuff. So it wasn't that we had to struggle bunny with the tax filing either. TurboTax did everything for us. Are you purely paying yourself yourself salary, or are you also taking dividends? So because I have an LLC, I don't really think we have these dividends. I just started taking a salary this month, actually. So my focus for the past year was to max out my retirement account, because I learned that you can only have a retirement account in one person's name, even if you're married. So I need to fund my own retirement account, and it just has tax benefits for me to put my money into my retirement account as opposed to paying taxes on it. So I've been focusing on maxing out my retirement. So my salary has been just direct contributions into my solo 401k. So I finished maxing that out in the first half of the year. And then now I'm just paying myself salary in the way of I'm putting 35% in a bank account labeled taxes, and then taking the other 65%. And I'm actually using that to prepay my mortgage because we just bought a house. You can do owner's draw, basically dividends. Okay, yeah, that's probably like much higher level than what I am comprehending about how to smartly use the business, which an accountant would probably help you with. So I should definitely get an accountant. Don't be like me. Get an accountant. Yeah, but basically right now, I've been too scared for the first year to touch the money other than to put it into retirement because I was scared of the taxes. And now I feel like I've gotten the hang enough that I can withhold a certain percentage for taxes and take a certain amount of money out. So hopefully I won't regret this decision. Do you have any suggestions for burnout or alternatively getting bored? Yeah, so I have burned out a lot. And when you are side hustling and having a full-time job, you do tend to have an accelerated rate of burnout. One way that I try to kind of manage my burnout is to make sure I'm excited about what I'm doing, which my full-time job was obviously not exciting. I was very struggling with it. In the end, I quit. It's one of those things where you have to take a break, you have to take rest, and I wasn't doing that at all. Every afternoon after work, I was working on my side hustles. Every weekend, I was working on side hustles. Every vacation time or holidays, I was working on my side hustles. It was just like, if I'm not at work, then I'm at my other work. And that's very not healthy. And I've been trying to break out of that after I quit corporate. And I still feel very guilty for not working at all times. And it's kind of just like I've been a detoxing process over the past year, trying to set on and off and set days that I'm going to work, set the hours that I'm going to work, so that when I'm not working in the hours that are not those set hours, I'm not sitting there going like, oh, I should be doing this, and this. Taking inventory of what work needs to be done and assigning it date and time throughout the week has helped me a lot, because I can kind of be confident that even if I had like a long to-do list for the rest of the week, they've all been assigned out to different parts of the week. So I don't have to worry about it now. If I complete the task for today, then I'm good to go. I can enjoy the rest of my day. I don't have to be like, oh, but I still have to do this, and this. That's been really helpful for me, because I no longer have to use my brain. It's out here and I just follow directions. And something with self-employment is like, you never have weekends off, right? You have to give yourself the weekend off. You have to give yourself the holiday off, the PTO off, a sick day. You have to give yourself permission. And a lot of people who do side hustle and who do think about going into self-employment, a lot of us are not the type of people who can just give us permission to take off. So it's really important that you do, and you realize that's part of staying healthy and having good work ethic, because if you're exhausted, you're not going to give that high quality work that you want to give your clients or your projects. Yeah, actually, I have like a little thing that I found the other day. So I started using this thing. It's like the 7 days a week, and just put your to-do list. And I don't know if I was reading a book or it was part of a course that I was watching, but they said people love to have really, really long to-do lists, but you should really focus on maximum of 5 tasks, because you will not get through any more than that when you have only a couple hours in a day. It's just going to set you up for failure and for you to feel bad that you didn't finish your tasks. So delegating those tasks, if you have a lot of them, to separate days really helps out with the mental load, because I no longer have to be anxious about the tasks that I have left to do. Yeah, thank you so much everyone for coming.